What do you need for successful trading? Name your top 3. Friends, hello everyone! That's what we talk about today. I will show you a very simple and at the same time reliable trading system for beginners, which gives a minimum of noise in the market and a maximum of useful signals. I will show you how to set it up. And at the end, there will be a bonus. I will tell you how to simply and most importantly safely withdraw money from Pocket Option broker. Let's go! Friends, let's begin. I'm going to show you the indicator setup for today's trading system. First, let's deal with the candles. In Pocket Option, you can trade with the usual Japanese candles or Heiken Ashi candles. Let's choose Heiken Ashi. Next, we set up the indicators. I will use Bollinger bands and the well-known stochastic oscillator. These are super popular indicators that almost every broker has, and today they will be enough for us to make money. Let's move on to the settings. Go to the Bollinger bands settings and set the period to 20 and the deviation to 2. In the stochastic settings, change the key period to 7 to increase its sensitivity and leave the other parameters unchanged. The settings are done. Now let's move on to trading. And I immediately see a good opportunity to enter a trade. It's better to trade in such a system on 2-3 periods. That is, on the minute chart, set the expiration time to 3 minutes. And that's left is to increase the investment in the trade. Today I am accelerating the deposit, so I'm going all in and immediately opening a trade to go down. Let's figure out the reasons for this decision and how my system works today. So, we will focus on 3 main signals. The first is to make sure there is a change in the color of the candles. That is, if the previous candle was green, then the next one should be red. This is a signal of a trend change or the beginning of a correction. But this is not enough, so we look for the second signal in the stochastic. Its blue line should cross the red signal line from top to bottom if we are trading downwards. Even better if the stochastic comes out of the overbought zone. It is located at the top of its chart, and below is the oversold zone. Similarly, we look for confirmation of signals to rise. This is when the stochastic lines exit the oversold zone and cross from bottom to top. And the third signal we track. The body of the last candles should be within the Bollinger bands, that is, not go out and not touch this boundary. There are situations when the body of the candle protrudes beyond the Bollinger bands, as in this case. In such a case, we don't open a trade but wait for the growth to end and the price consolidation phase to begin. Here we don't trade. Now I have a full set of signals to lower the price, so I open the corresponding option with an expiration time of 3 minutes. I remind you that in such a system, good possibility is achieved when trading in 2-3 periods, depending on the time frame you are trading on. If you work with a chart on 5-minute candles, then set the expiration time to 10 to 15 minutes respectively. While we are waiting for the trade to close, I will tell you a little about Heiken Ashi candles for those who are not in the know. It's considered the second most popular after Japanese candles. However, according to my observations, about 5% of traders use it, a maximum of 10. In fact, this is also an indicator that, thanks to algorithms, remakes Japanese candles and smooths out noise. Simply put, such a chart can be called a candle moving average line. If you compare Heiken Ashi and Japanese candles, it may seem that they are the same. However, Heiken Ashi has a shorter candle shadows. At the same time, the body of each subsequent candle starts exactly in the middle of the body of the previous one. Because of this, price levels on charts are slightly different. If you read the biography or memoirs of any famous trader, you will see a certain pattern. There will be no top strategies in them that brought success, or stories like "I did this and therefore won." More often than not, these will be philosophical reflections on how to control emotions, how not to panic when everything falls apart, and how not to lose your head on the wave of first success. And this is not just about trading, it's about any business and success in it, really. Because the path to this is not a sprint but a long marathon, where basic skills are important on which strategies and other attributes are already configured. And I invite you to take part in such a marathon. What's it about? Every week in my TG channel there is a trading marathon where other participants trade according to my signals. Success is assessed over the long term, and over the course of a week we show good results. On average, my partners increased their deposits from 100 to 5,000 bucks. You can check the results and reviews of participants in my TG channel. The link is in the description of this video. Subscribe and write to me in private, and I will tell you how to take part in the marathon. See you in TG, and for now, let's continue to analyze today's strategy. Now we have a mirror situation, so this time I open an option to increase the exchange rate. Let's analyze the system signals in this case. Earlier, the chart was falling freely, which was quite long. Then it reached the support level and the sideways trade began. At this level, I waited for the bodies of the candles to be within the Bollinger Bands channel. Then 3 green candles appeared. But I did not open the trade immediately, but waited for the stochastic lines to exit the oversold zone. This is the most accurate signal to avoid weak fluctuations during low volatility. Although, if I had opened the trade immediately on the first green candle, as we see, after 3 minutes I would also have been in profit. By the way, if we look at the chart on a larger scale, we will see that at the current mark there is indeed a strong support level from which it has bounced more than once. And after the bounce, there was a prolonged growth. This one again confirms my analysis and the high probability of the correct decision. For those who are not aware or have forgotten, I remind you that any level is a certain zone of the price range. For simplicity, they are more often drawn as a plane, but this is not quite correct for a correct understanding of the market. Friends, we are waiting for the deal to close, and in the meantime I'll finish a brief excursion about Heiken Ashi candles. The Heiken Ashi chart is dynamic. All data for construction is taken from Japanese candles, and the formula takes into account opening and closing prices, as well as minimum and maximum values. Because of this, its readings lag a bit. This is both a minus and a plus of the instrument. The downside is that the signal to open trades come a few seconds later. But at the same time, all market noise is cut off and a more accurate market picture is visible. Another feature of Heiken Ashi is that the algorithm shows the strength of the trend. The larger the body of the candle, the stronger the trend. The shadows should be directed towards the trend and almost absent on the opposite side. When the movement weakens, the bodies become smaller. This is a warning that it's time to close the position. Therefore, in this trade, I didn't immediately open for an increase, but waited for the exit from the sideways trend, which has confirmed by both the candles themselves and the stochastic leaving the oversold zone. Thanks to noise smoothing, Heiken Ashi is, in my opinion, a good tool for beginners who are just starting to trade. These candles also smooth out the desire to jump into every trade as soon as a candle moves a bit in any direction. It works! We close another trade with $42 on the balance and look for a new trading opportunity. Let's open a trade for a downward trend here, friends. Despite the absence of a trend reversal and even visually obvious sideways movement, the trading system principles still work. Let's repeat them. The bodies of the green candles are within the Bollinger Bands channel. There was growth and the candle shadows touched the resistance level but didn't break it. The level is here. By the way, if you look at the Bollinger Bands themselves, they neither expanded nor contracted, indicating no trend and sideways movement. Next, the candle on which I opened the trade is red with a long body, and the stochastic oscillator is leaving the overbought zone. By the way, the wider the stochastic lines diverge, the stronger the chart movement will be. Watch for this, it's also a good signal. In this case, I managed to catch a good entry point, just above the middle line of the Bollinger Bands channel, so we can assume the chart will go to the lower line. Let's watch the chart movement. Let's see how the trading system works this time. Oh, I forgot to tell you one important thing. Let's draw a bit more. Friends, the middle line of the Bollinger Bands is essentially a moving average over 20 periods, and we see it turning downwards. This is an indirect sign that the chart may soon exit the sideways movement and a downward trend will begin. Therefore, opening a downward option based on this signal also seems quite logical. Actually, I expected the chart to start bouncing and turning around from the middle line of the Bollinger Bands, but there was a sharp jump to the upper line, which turned out to be even better. Since the higher the entry point, the greater the chance of success when trading downwards. Ideally, I should have opened at the peak from the resistance level, but I decided to act according to the system, as there were doubts that the chart would break the level. If there are doubts, the decision is made. This is a good principle I recommend all beginners following in trading. It's better not to lose money than not to earn. Larry Williams formulated roughly the same trading rule. If you don't know who he is, definitely Google him to broaden your horizons. He is a very famous person in the financial world and the creator of many popular indicators you use. He formulated his 10 principles of successful trading. And the first one sounds like survive at any cost. But we'll talk about that later, friends. For now, let's return to trading and secure the profit. $80 on the balance. Approaching the first 100 and the lower boundary of the sideways movement. I want to pull off a little trick now. But for this, I will reduce the expiration time to 1 minute. The Bollinger Bands are narrowing, which is a sign of falling volatility, so I'll open a trade to rise now, expecting a bounce from the sideways support level. But I reduced the expiration time because the bounce is a short-term process, and 3 minutes is too long. During this time, the price may already return to further decline. The market is cyclical, and we see constant bounces from this level, so I'm expecting it this time as well. And then I expect the rate to continue falling. Although, if you look at the stochastic, there are reasons to believe there won't be a breakout and the chart will return to price corridor. As you can see, the stochastic lines are crossing from bottom to top near the oversold zone. While waiting for the trade to close, I'll return to 3-minute expiration that I use in today's main trading system. Just a few seconds left until the trade ends. Let's wait for it, but we can already say with almost certainty that it will be profitable. Indeed, $150 on the balance. With this amount, I'll continue to accelerate and look for a new trading opportunity. Let's get back to trading by the system. I found a great entry point for an upward trade. Let's quickly review the signals again. I think the logic should be clear by now, but let's repeat it for consolidation. So, I waited for a confident crossing of the stochastic lines in the oversold zone, and now the oscillator curve is getting ready to leave it. There is a green candle, the body of which is entirely within the Bollinger Bands, and I'm expecting growth. I think the price will reach the middle line of the channel. While we wait, let's talk about Larry Williams' trading rules since I started this topic. The first one I already mentioned. He formulated it as survive at any cost. What does it mean? The first condition for survival is to have prerequisites for trading. Rumors, tips, gut feelings, or a full moon are not prerequisites. There are explanations for how, why, and when markets move. The problem is that there are more methods and techniques that don't work than those that do. I recommend spending a huge amount of time and effort studying these methods before getting into finance gains. And even if you study and manage to control your money use, even if you have a working system and approach, you still need to be able to control yourself. Let's elaborate a bit. That's exactly what Larry Williams did. In the end, trading is an emotional activity. It always has been and always will be. Every time your money is involved, especially if it's big money, blood boils, palms sweat, and illogical emotions block mental processes. When most traders are buying, they should be selling. Therefore, to survive in trading, it's important to learn to control your emotions and stay calm. Sometimes fear scares you away from a great trade. Trading turns into an emotional roller coaster. When you deposit your first money, you want to earn quickly and start entering all trades. And when the deposit melts, you start sitting back and are afraid to trade, fearing losing more. Does it sound familiar? Then trade calmly according to the system. Choose one that suits you best and open trades only according to it. In my channel, I've already reviewed many systems and indicators. Rewatch them and choose the best one for yourself. Or you can choose this one. After all, it also brings excellent results. $281 on the balance, and it's time to look for a new trading opportunity. Friends, look at the chart. Another good entry point for a trade with the currency pair Canadian dollar and Swiss franc. I opened a trade on small pullback, but everything else is according to the same system you're already familiar with. We have the stochastic leaving the overbought zone with good separation of its lines. Red candles have appeared and the candle body is within the Bollinger Bands. I didn't open immediately on the red candle, but waited for the stochastic signal, after which a very fortunate pullback occurred. This is almost the perfect moment. Today I have long trades, so let's talk while waiting for the closure and continue about Larry Williams' trading principles. We talked about the fear of opening a trade. Fear holds back risk-taking precisely when it should be taken. This leads to you not doing what you should. It makes you refuse profitable trades and pushes you into losing ones. In short, greed makes us do what we shouldn't, and fear prevents us from doing what we should. Then the trader acts like a deer in the headlights of an approaching car. He sees the car, a losing trade, moving straight at him, but cannot take the actions that would save his life. I had the same experience. I noticed a tendency. The more scared I am of a specific trade, the higher the probability that it will be profitable. Leave a plus in the comments if you feel the same. Most traders are hindered from achieving success by fear. The very fact that you start trading means you are less prone to fear than the average person. You are more driven by the desire to make money. The motive of other people is to avoid losing money. But there is another emotion with a mirror effect that also hinders trading. It's greed. This is the Achilles heel of a trader. Greed supports hope, leading to opening losing trades. Hope is your most dangerous enemy because it makes you dream of big profits and live in an unreal world. But when you return to real world, you lose everything you have. And it's not just money on the deposit. Families break up and lives fall apart due to financial collapse. All this happens because of grandiose profits or losses. Friends, it's time to take a break. The trade is closing. Even if I hadn't opened on the pullback, I would still have made a profit because the downward movement of the chart was very confident. Let's look for another, hopefully equally successful opportunity to earn. Finding an entry point by the trading system took a while, but I see an opportunity to earn in sideways movement by bouncing off the level. But for this, it's necessary to shorten the expiration time to 1 minute. Such a trade has already been today, and now, while volatility is low, I decided to repeat it. The Bollinger Band's range is very narrow, indicating dead volatility. It's completely absent. And there is a price corridor with a resistance level. Let's draw it. It runs right here. And in the next minute, I don't see any reason for the sideways movement to end and the level to be broken. So we trade downwards for 1 minute. Let's observe. In such a situation, it's also important to control your greed and open the trade at the perfect entry point, as close to the resistance level as possible. Because with weak volatility, the decline from the level can be very weak and a minute might not be enough. But this time everything went great. Money in the bank, and I'll look for a new trading opportunity. I hope the market calm ends and we have more dynamic trading. Yeah, such sideways movements happen, but not finally a way out of this stagnation is emerging, so I opened a trade to increase. Here the logic deviates from the system we discussed, so let me explain the reasons for my decision. Earlier, the chart was actively growing until it stopped at the resistance level, where a fierce sideways movement began. But now we see that the chart has already broken through the upper boundary of the price corridor and the resistance level. Moreover, volatility is growing as seen by the expanding Bollinger Bands. The stochastic is also striving towards the oversold zone, thereby confirming my hypothesis. Therefore, I conclude that the upward trend that existed before the sideways movement will continue, and I open to trade in that direction. By the way, as I said earlier, if there are upper shadows on the Heiken Ashi candles and there are no shadows at the bottom of the candle, this is also evidence of a trend. Let's observe and continue our conversation. We've already discussed that mastering emotions is the most crucial step on the path to a trader's success. But that's not all. It's also important to be able to manage capital. Larry Williams made a name for himself. It's also important to be able to manage capital. Larry Williams made a name for himself by winning the Robbins Cup. It's like the World Championship among traders. Participating in the tournament, he managed to turn $10,000 into $1,100,000 in 12 months. These were real money, real trades, and it all happened in real time. For many years, people have asked him to show these trades to understand how he managed to do that. And he willingly shared this information, but it was of little use. He achieved such huge capital growth, not so much due to some fantastic trading abilities, but thanks to an aggressive form of capital management that he used. The approach was to buy more contracts as the capital on the account grew, and reduce when the money became less. According to him, this led to $1 million, not a secret trading system. This is what is called money and risk management. Larry believed that by making too large investments in trades, you would eventually suffer a loss, and this loss would be huge. It's like Russian roulette. You can spin the drum with a bullet hundreds of times and never lose. By the spinning it very long, the result can be only one: death. Simply according to the theory of probability. The same applies to trading. Whoever invests large amounts in trades will inevitably lose them. But for us, everything ends without losses. The trade brings the first $1,000 to the balance. To be precise, there are already $1,657 on the deposit. And let's try to increase this amount once more. Here is not so obvious, but I'll open a trade to go down. I added one more indicator to the system, rate of change. This is a tool that shows the speed of price change. Let's draw a bit and I'll explain my logic. In principle, in this trade, I rely more on the signals of the trading system that we have already discussed. We see an aggressive reversal of the stochastic and its exit from the overbought zone. And we see a color change in the candles with the candles within the Bollinger bands. But I added the rate of change because I wasn't sure if 3 minutes would be enough for decline to occur. When its curve is at highs, the price change happens actively, as in this moment. But if its curve is heading towards the zero mark, there are situations where a few candles go down and then on the third it goes up, especially when the Bollinger band's middle line is near, from which a bounce is likely. And now the rate of change shows weak activity, but I still took the risk and opened a trade because the stochastic gives a very strong signal for decline. Its lines are divergent too far apart. So I think with such momentum, the chart can very well go below the Bollinger Band's middle line, and 3 minutes will be enough to successfully close this trade. I believe the position I opened will bring a loss. These aren't my words, but a quote from Larry Williams. He considered it his main rule, and I recommend you to follow it. Most beginners are sure that in the next trade they'll hit the jackpot, like in motivational training where they teach you to think positively. But Larry believed that success could only be achieved when there are no illusions. Only then does a trader act like a flawless warrior, protecting himself and his money by all means. That is, to survive in the market at any cost. We talked about this at the beginning, and we've come to it at the end of the trading session. Follow these rules, friends, and this trading system. Learn from the best, and it will definitely reflect in your deposit. Well, I'll say a few words about the trading system. I think it's great for beginners because it has very little noise. There are clear and understandable signals, and trading on them yields good results. It requires patience and the ability to wait for the moment, as signals are not always frequent. This is its only downside, but it doesn't compare to the positive balance you can achieve. $2,500. How do you like that result? A great amount in the account, which I suggest we withdraw to the wallet. I'll withdraw almost the entire amount. For this, I entered $2,500 in the corresponding field of the withdrawal form. I enter my crypto wallet address and click Continue. So, here is a message saying that the withdrawal request may take several days to process, but this is only for amounts over $10,000, as the broker conducts additional checks in such cases. This doesn't concern me now. $17 left on the balance. Let's go to the history. We see my $2,500 request, which is still being processed. The actual waiting time is from 15 to 25 minutes. After that, I'll return to this window and show you the completion of the transaction. The withdrawal is complete, the money is in my wallet, and the transaction status is in the history has changed to completed. That's how simple it is. I withdraw money in crypto, namely in USDT, and it's the easiest way to receive and use the earned money anywhere in the world. It's very convenient if you travel a lot. You don't have to worry about bank transfers between countries and having multiple cards. And the coolest thing, crypto withdrawals are commission-free. On this note, we end the trading session, friends, and summarize it. Friends, today's video turned out to be long. Thank you for watching till the end. I hope you liked it. If so, give the video a like and subscribe to my channel. And to not miss new reviews, click the bell. I left a link to my TG channel in the description, where you will find not only a wealth of useful information about trading, but also a great bonus to start. In TG, I'll share a link through which you'll get a 50% bonus on your first deposit in Pocket Option. Such a bonus will definitely be useful. That's all. Glad to see you and see you soon. Bye!